Hello, I'm David Mandy, President of O&M Partners in New York. I want to welcome everyone today to the town hall for Rupert Resources. Rupert trades on the TSX Venture under the symbol RUP, and they also have an OTC listing here in the States, RUPRF. For those of you who are new to this broadcast, this event is brought to you by as I said, New York-based O&M Partners. We're a marketing and communications company. We're in the business of bringing the managements of public companies and non-deal investors together in real time, giving context and helping make better informed investment decisions. We're not a broker dealer. We're not commissioned. We're simply a communications company. On today's call, we want to answer everyone's questions. So please either chat your question in, or you can go to the question pane of GoToWebinar, and it's pretty self-explanatory. Be assured your questions will be answered by management in a reasonable time, either during the call or reasonable time after the conclusion of the call. Before we turn to our guest, our host today, I'd like to turn to our guest speaker to give us some context and better understand the opportunities that Rupert Resources presents. Pleased to have Joe Mazandar on the line. Joe is is an editor of the explorationinsights.com. He has quite a background. He's a top analyst. Previously, he spent 6 years as a senior mining analyst at Haywood Securities. He was also with Canaccord Genuity in Vancouver for 6 years. Director of strategic planning, corporate development at Newmont in Denver, and then also senior market analyst, commodities trader at Phelps Dodge, now Freeport McMoRan in Phoenix. So it's a real pleasure to have Joe with us today, and I want to turn the call directly over to him.
Hi, yeah, thanks for having me. Yeah, today I guess I'll just talk a little bit about Finland. Visited a couple of times, basically the northern part of Finland, to visit some exploration. And also last year, towards the end of the year, I went to the 12th Biennial Fennoscandian Exploration and Mining Conference up there. And I also had a site visit to Agnico-Eagle's Kittilä underground gold mine. So Finland, I mean, interesting country. I mean, it borders Norway, Russia, and Sweden up in Scandinavia. It's got a population about 5.5 million, so much less than New York City. It's got, the highest ranked educational system in the world, very high GDP per capita, over 45,000 per person. And in terms of area, it's deceptively big. It's just a little bit smaller than Germany, but bigger than Norway and Italy. So in terms of exploration or mining, it's not, I guess, the primary industry in Finland, but it is growing. And one of the biggest attractions with Finland, or of any country, is jurisdiction, like how well stable is the jurisdiction, and then the other thing is the prospectivity geologically. So in terms of jurisdiction, I mean, if you look at these surveys that they do annually with the Fraser Institute in terms of policy perception index, how do mining companies basically perceive how a country is doing with respect to its mining policy? I mean, Finland ranks, number one. It's got a score of almost 100. It's got attractive mining policies, ranks right up there with Western Australia. And with respect to corruption, which is a big deal in some countries, it's basically right up there, like number 3 out of about 100. It gets an 86 out of 100 on that. Corporate tax rate is fine, 20%. The only issue I would see about the country is, just in terms of entrepreneurship, most of the companies in there that are mining and also predominantly exploring are Canadian-based companies with a few Australians and Swedens in the mix, and also South Africans with Anglo-American. But so there's not really that many Finland companies. I mean, one I guess would be Firefox, but I haven't seen that many in there with respect to being Finland-based. But in terms of prospectivity, I mean, there's two big belts there in terms of rocks. There's the Central Lapland Greenstone Belt, which is very prospective for gold. And there's also a belt there called the Tornio Narancavara Belt that's prospective for base metals like nickel and copper, and also platinum group metals. And yeah, so we've had a lot of exploration companies going into Finland, not only for the stable jurisdiction, but for the geological prospectivity, but also the infrastructure. And so here you are, with a country that's, a good proportion of it, of the country is above the Arctic Circle. And so if you're above the Arctic Circle in a place like Canada, we're talking about remote camp, helicopter supported drilling. We're talking about fly in, fly out. But there, Kittilä, the underground gold mine that Agnico run, that's drive in, drive out grid power to the site. And so this is refractory ore that requires an autoclave and about 4 to 5 grams underground. This would not work in northern Canada given the infrastructure, but there, because you've got power, roads, it works. And so, and also, in terms of ease of doing business, the World Bank's ranking, I mean, it ranked as high as 10 out of 190 countries back in 2014. It's come off a bit, but it's still like, with respect to it's still in the top 20. And also with respect to human resources, it's really good. And because of the educational system is so good, I conducted a conference during the conference, a short course, we call it Capital Market for Geologists, with a few colleagues. And, the average participant there was really quite high end. And most of them were already working for major precious and base metal companies like Agnico, Boliden, Lundin Mining, and Newmont. So there's quite a good group that we had for the conference with respect to the short course. And the other thing is that when a company gets there, the government, the Geological Survey, provides them with a lot of data that's free. There's electronic databases that they could download government collected geological, geochemical, geophysical surveys that they can use to basically stake ground. And once you've permitted, you get an all-encompassing exploration license and you're free to work right away, mapping, sampling, trenching, or drilling. I mean, one of the negatives there is that in terms of staking land, it's easy, but the holding costs can be quite high. So it's around €20 per hectare. And they could rise after the first few years to up to 50. And so you'd want to have, as a junior explorer with, that's non-cash flowing, obviously, you'd want to have somebody like a joint venture partner or somebody helping you, basically trying to mitigate just carrying that expense if you've got a big land package. So that's one negative, but it can be mitigated by having a joint venture partner. So in terms of access to ground, it's pretty good. The only real issue is the European Union's network of nature protection areas called a Natura, and that exists obviously in Finland because it's part of the Euro. And so you just got to watch, if you are interested in a company, the relationship with any of these habitats, which might make it a little bit more difficult either to permit or to work productively in the area. But overall, I mean, if we look at the total land area, occupied by exploration and mining claim, it still represents about 15% of the total area of Finland, which is, I mean, it's comparable to Peru with respect to how much land that they have available for companies to look at. So even though we do have the issue about Natura, it's not as if the amount of ground that they have left for exploration and mining isn't significant. Okay, with respect to exploration trends in Finland, I mean, the main drivers back in 2018 were base metals like nickel, gold is big, a bit of copper. And basically nickel was driving a lot of the revenue from metals. In terms of exploration, Finland has been a company that's been a focus previously. So in 2012, there was about $170 million spent in exploration in Finland, but most of that was directed to platinum group metals, more to gold, and then less so nickel and copper. But after PGMs, platinum group metals prices fell, so did exploration for both platinum group metals and nickel. And so what's picked up recently is more gold. And so right now we're sort of seeing about 60 million odd being spent per year in Finland. But that could be rising because the PGM prices, especially palladium, have been spiking quite a bit. And also there's more interest in nickel sulfide deposits as well. So we might see a resurgence in exploration in Finland. And so right now we see, like I said, entrepreneurially, there's less Finland-based companies doing exploration. So we've seen a lot more Canadian-based, Australians, Swedes, and South Africans in there. And Finland, being such an attractive jurisdiction, has seen the ability of these juniors pre-COVID-19, their ability to raise money, they're pretty easy. And also their ability to do joint ventures pretty easy and find big companies, and they're willing to do them. Like recently, like Rupert Resources just did a joint venture with Agnico-Eagle on their ground. Prior to that, Orion did one with B2 Gold, and they've also seen financing help from people like Kinross and that. So we're seeing big companies interested and little companies being able to raise money, which is both a positive. So in terms of interest of the outside world, Kittilä is owned by Agnico-Eagle, and I visited that project last year, and that's reserves of about 4.4 million ounces at 4.5 grams, and they're continually doing more exploration there. But again, as I said, this refractory underground deposit wouldn't work in the Canadian Arctic, given the lack of infrastructure and the fact you would have to do diesel power. But there it works because you've got grid power, you've got road access, so there's no fly in, fly out. So the infrastructure costs make that kind of deposit generate decent enough margins for Agnico to keep operating that one. And so besides that, I would say I saw that there was Anglo-American I knew very little about, but they already have a pre-feasibility stage polymetallic project called Sakatti, actually close to a belt where it's usually known for gold. So all I'm saying is that the exploration that's been done so far, might not have found everything there, and so I still think that Finland is prospective going forward. But I would say that one of the that issue about holding costs might deter some companies from exploring there because of the high cost of holding ground, and the ability to do joint ventures with other companies to help mitigate that cost is important, I think, going forward. So in summary, Finland, stable jurisdiction, excellent infrastructure, great people with respect to human resources, and also with respect to educational system, high cost of holding, but the ground is still prospective. So yeah, that's my take on Finland. Thanks.
Thanks, Joe, very much for sharing your knowledge with us. Real pleasure now to turn to our host today, James Whittall, who's the Chief Executive Officer of Rupert Resources. James joined in Rupert in April of 2017. We know him from his previous position as a managing partner and top fund manager at Baker Steel Capital Managers. James was a lead manager of the award-winning Baker Steel Global Fund's Precious Metals Fund, and was voted top performing over several years. But he also has not only has he been on the buy side, he worked for more than 7 years as a geologist in Western Australia for a number of gold mining companies in exploration, project and mine geologist roles. And before joining the development team, then he joined Xstrata on a vanadium project. He also has a degree in applied geology as well as a master's in mineral project appraisal. So James has a deep, strong background, and it's a real pleasure to introduce him to you and turn it over to the call to James.
Hi. Well, thank you very much, David, and thank you everyone for joining the call this afternoon. It's a great opportunity that's provided, and also thanks Joe for his thoughts on Finland just now. Hopefully you guys found those pretty informative. I'm going to speak for about 20 minutes, just to give you a really good summary of Rupert Resources and what we're doing in Finland, and I guess probably add a bit more to what Joe said about Finland itself. Rupert Resources is ultimately an exploration company. It is based in northern Finland, up in Lapland here, and the image in front of you is northern Lapland, as it is in the summer. Our guys up there at the moment, there's a meter of snow on top of that right now, so our team up there are looking forward to that snow melting, hopefully in the next few weeks. But I guess there's also a key point on this slide, is it's what differentiates us from other exploration companies. Whilst we're actively really exploring very aggressively, we do actually own a fully permitted gold mine and a milling facility, which you can see there in this image, which is a huge differentiator for us, and I'll go into that in a bit more detail as we go through the presentation. So usual cautionary looking statement, obviously we'll be making some forward looking statements today. So to the investment highlights, as I said, we own a permitted, recently producing gold mine, last produced in 2014. And beyond that, we see great exploration upside at that mine itself, but you'll hear a lot about our regional exploration here and how successful we see that and the opportunity we see there. Just to add to Joe's comments, Finland is a great place to work. It was one of the key reasons why I left my previous job and joined it. I think he did mention the high landholding costs, but ultimately my view is that explorers have to be relatively aggressive, and you have a limited shelf life. As an exploration business, you have to prove success. So you can mitigate that by allocating your capital well, spending it efficiently, and really pushing on fast to find and make those discoveries as quickly as possible. And Finland allows that because of all that data that exists. Obviously, yeah, as mentioned, previously I was a former gold equities fund manager, so I guess again that differentiates. Many exploration companies are just run by people who have always been in the industry. I have a great perspective to sit where investors such as yourselves are sitting and look at these companies. So what have we been achieving? We've been achieving multiple new gold discoveries in this region. It's a very highly prospective region geologically, and it's never really seen the commercial exploration that it should have had. And we're very well funded. We had a strategic investment by Agnico-Eagle for $13.1 million in February, and that set us up well. We already well funded before that, set us up well to explore aggressively. So a bit more, I guess, about me and a bit of the strategy. I guess as my role as a fund manager for 13 years, I met hundreds of gold companies, reviewed in the region of 1,500 odd projects over 13 years. And probably most importantly, had about 4,000 or 5,000 presentations like this given to me. So obviously I've seen it from the other side an awful lot. And it's about trying to recognize what's a really good opportunity. And obviously I'd leave that unless I can recognize a decent opportunity to join. So again, for the junior sector or an exploration company in this sector, you want to have work in a very good jurisdiction like Finland, have a very large land package to start off with that's got highly prospective geology, make an assessment for that, and ideally pick up something really that's probably had there's a lot of historical or existing data that you can unlock the value of. And obviously with all the government data that's there, the previous operators of the mine, we acquired a huge amount of existing data, which we've been able to work over the last few years, and that's given us a multi-year head start in realizing the potential of this property. So what is our strategy? Our strategy is about demonstrating the production potential and the resource upside at the permitted mine that we own. And that's where the company started out, and we're continuing to do that. And then it's about systematically exploring the region. Most exploration companies, they struggle. They might find something small and then they'll spend a lot of money on something that ends up just continuing to be small. I see exploration companies and running exploration companies not that dissimilar to portfolio management. You have a portfolio of potential targets that you have, exploration targets, and you're trying to extract the most value out of those, and you're trying to allocate capital in the most efficient way possible to do that. You've seen similar strategies and similar opportunities in many companies. I think having that oversight is important. So I guess as a fund manager or ex-fund manager, I just want to give you a bit of my view on the gold equity space and also how it applies to the exploration sector. Obviously, we're at quite exceptional times in the gold market right now. Obviously, where gold price is at are close to record highs in US dollars, and it's at record highs in multiple international currencies, so in Aussie dollars, Canadian dollars, and even in euros. It's gone moved up significantly since I started. When I joined Rupert Resources, the gold price in euros was sort of 950, 1,000 euros an ounce. It's now well over 1,500, and that that in itself just transforms the environment for us as a company and for potentially exploration in the European regions. But my view on gold, for that is I see it as I've always seen it really as a currency, and it's a currency that has always outperformed all others and will continue to do so going forward. But obviously there's this huge spread now between gold equities and the gold price. And with this gold price now hitting new highs, I think obviously we're seeing a lot of interest in gold as a commodity right now, and we're beginning to see a lot of interest in gold equities. And obviously we've had if you compare the downturn that we've just seen in gold equities with the COVID crisis, it's a lot less than 2008, and you're actually seeing gold equities begin to perform now. And obviously they've still got a long way to close that gap. They're still sort of pricing in, still at the same levels when gold was half of what it is today. On the second chart here about exploration and success in exploration and picking exploration companies is mostly about timing and where that company is in the cycle. To be successful as an explorer, you need to acquire assets right at the bottom of the cycle. We acquired part of Iron for just $2.5 million in 2016, when no one else was really interested in acquiring projects. You just couldn't replicate that today. And also, they're not just about acquiring, it's about finding people with the backing to put money into the company to invest in exploration at the bottom of the cycle, because that's when the real discoveries are made. The reality is the peaks in discoveries in this sector have always preceded the peaks in spend. If you look back to the sort of 2010 to 2012 range, there's a huge amount of money raised and a huge amount of money spent on exploration. But unfortunately, as the chart shows, there weren't a lot of discoveries made from that, because you get very poor allocation of capital at that point in time. A lot of money, but not well allocated. When the market's at the bottom, you get people that have been involved in the industry for a very long time, allocating capital to projects they've been able to acquire right at the bottom of the market, using all that money, all that investment that was spent before, good or bad, but it created a lot of data to unlock. So it's about getting in early, ultimately, and then now, if we see the gold market rise, we're already at that discovery phase, which actually takes 2 or 3 years to get to. Just zooming into the area where we're working, where the Partavara project is. You see our land package here. It's a very large land package. It's 40 kilometers almost from east to west. I guess there's a lot of other land packages in the belt, certainly, but we own one of the largest here. Joe mentioned the Anglo-American discovery of Sakatti, not too far away, and then Boliden's large Kevitsa operation. But I think the really important takeaway from this slide is that whilst it's a relatively big belt and there's quite a few operators, there are only 2 gold mills, the Kittilä mill, which is owned by Agnico, off to the northwest of us, and the Partavara mill. So in terms of new discoveries and where they may well get processed in the future or the near-term future, between Agnico and ourselves, we own that infrastructure. I keep on going on about this mill and what I guess the importance of it, just trying to relay that to you. Obviously, exploration success is about turning an amount of money that you spend to discover every ounce. And for usual discoveries, it ends up being anywhere from $10 an ounce to $30 an ounce to discover something. So if you don't have a mine or a mill, which obviously a way of efficiently unlocking that value and bringing it to market without having to invest all that capital, like a Dalradian or a Kaminak, they made great discoveries. But ultimately, without that mill, when they got acquired, they could never get that sort of premium valuation that you get if you had a sort of fast track way to developing it. Rupert has that, just like Integra Gold had that. And obviously Richmond was the discoveries it made, they were at the Island Gold Mine, which actually wasn't that much bigger than Rupert's Partavara mine. but they demonstrated the huge amount of potential at Island, and those ounces got acquired for a very significant premium to anything else. Had it not had that mill there, I don't think they would have ever had that premium. So we see for our shareholders, it's important to have that mill because it allows you that potential to get a higher valuation or a higher premium valuation for the discoveries that we're making. So looking at part of R itself, obviously this is the mine here. You can see the mill just in the north side of this picture. This is one of our main exploration targets. The previous owners, it's been owned for 20 years, but I think had 14 years of production. They only really operated in those orange zones in the middle of the screen here. Rupert's focus has been to explore beyond that. When we picked this up, it had about 150,000 ounces of resources. Back in 2018, we demonstrated it had just under 500,000 ounces of resources. And on here, all the blue areas are where we've been exploring. And we've just put in a handful of the drill results from this last winter's program on there, and some of the exceptional results we've had right next to infrastructure. So in the hole to the top side there, 63 grams over 12 meters, right on the edge of this pit in an area called Harpoon, and with 150 meters of the mill itself. And then 220 grams over 5 meters in NFE, other area. The mineralization occurs, the high-grade mineralization here occurs as these plunging shoots, and we've been able to successfully target those because we've done a lot of work trying to understand this deposit. So that was the surface view. This is cross-section, and again, this image is really just to demonstrate how much is already there. This is the resources that we have today in the block model, but also all that infrastructure that's there. That infrastructure exists. You could come to the mine tomorrow, we could drive down towards the bottom of the mine. They put in 30 kilometers of underground development. And if you had to replicate that today, that in itself would cost in the order of $90 million to replicate. So again, we bought all this for $2.5 million, not including the plant and not including this huge exploration land package that we have, which we've been very successful on already. And again, a highlight, as one of the highest grades ever found at part of our 3.1 kilos over 0.5 meter in some underground sampling. And that sample wasn't from inside the resource or inside the mined area. We found that whilst we were doing mapping and sampling of what we call a ventilation raise, a bit of infrastructure that was off the main ore body. So again, just pointing to that potential that's there. So moving back out to the region, and again, just try and give you a bit of a sense of the scale again here. Obviously, you've got that scale bar, but if you were to get in a car and drive from one end of our license to the other, we have great infrastructure, as Joe said. It would still take you a good hour to go from one side to the other to get across that 40 kilometers. So when we arrived here, there'd been very little exploration beyond the mine. There'd been a few gold occurrences found, but really very little. So looking at the company today, it's very different to where we were back in 2016. Back in 2016, 2017, 2018, when the market still didn't really care about the sector, we were busy just doing all the stuff that the market doesn't care about: geophysics, geochemistry, understanding all this historic data that exists, and putting that together. And then said at the beginning, you're effectively looking to identify where are the highest return areas on your license package. Of that, obviously, there's the mine itself we talked about, but there's a couple of lines there in white. That's a 20-kilometer structural trend that we identified early on, and one of the main reasons I joined the company, because this potential of this was an unexplored major structure in this part of the belt. And then within that, it's about prioritizing where's the best part within that to explore, and that was this area one. And just about 15 months ago, we had no drill holes, no geochemistry information at that point, a very limited geochemistry information, and it was basically all under 10 to 20 meters of cover. And in that 15-month period, I haven't done it, my team's done it, and they've made 5 significant gold discoveries in that time. And we're currently drilling there at the moment. So this is a busy slide, but zooming into there, again, to give you a sense of scale, that's 6 kilometers from end to end of that picture and 2 kilometers north to south. And it marks on a few of our discoveries. But again, takeaway here is that we've put a surface expression of the Kittler mine on there for some scale. Obviously, the Kittler mine now has a reserve of 4 million ounces, but a resources of 8 million ounces going down to 2,000 meters. If you look at our discoveries, Heinous, these Finnish names, Island North, Saita, Heine North, South and Central. You look at each one of those, they have, they still have the potential footprint size on the early stage of the discoveries. Maybe they could host a Kittler-sized deposit. But to take it from nothing to where we are today, and we've drilled about 100 holes here this year, about 15,000 meters of drilling has been going on. We have about 6,000 meters of assays in the lab at this point in time, so there's a huge amount of news flow still to come, and that still hasn't come from this. And so over the coming months, you're going to hear more and more about the discoveries we've made in this area and our new increased understanding here. So it's a very exciting time for our team on the ground and our investors in the company and potential investors to look at this. So how have we done it? I'm just conscious of time, so give you guys more time for questions. Probably the key people here early on, Mike Sutton, who many of you may have heard, who was behind the South Mine Complex at Kirkland Lake. He was very much involved in the initial drilling at the mine to look beyond what they've mined before, and he sits on the board and a very well-regarded exploration geologist. And then in country, we operate an almost entirely Finnish team, apart from one person, Dr. Charlotte Seabrook, Charlie, who worked for us. So she's been with us coming up for 2 years now. She joined from Newcrest in West Africa, and if any of you are active followers of the market, you probably follow a company called Roxgold. They bought an asset called Segela from Newcrest, and she was very much behind the discovery of that Segela deposit, which there was only a study put out 2 days ago, and the IRRs on that project are sort of in excess of 40%. It's turning out to be a really great project for Roxgold, having bought that. So she joined us, and it's about bringing in the challenge we had is that a lot of information, a lot of skills in Finland, a very good geologist, but we wanted to bring in that commercial exploration overlay, a very experienced exploration geologist who knows how to rank targets, see when they're going well, see when they're not going well. Because the biggest risk in exploration and running these companies is continuing to invest into something that isn't going to be a significant deposit, isn't going to be that really economic deposit that can drive returns. We effectively have a cutoff, which would be quite honest. We are looking for big deposits, things of 2 to 3 million ounces. That's the sort of scale of projects we're looking for. So you have to have that disciplined approach when you're doing it. Through Charlie and myself and Mike, we've been able to attract some really well-regarded consultants and advisors to come and work with us. A few of those are listed there. Onto capital structure, just a quick overview here. We have 155 million shares out, a very simple, straightforward capital structure. We've said we're very well financed. We had our $13.1 million in from Agnico in February. They also have warrants for up to about another $10 million, $1 per share. So there's further funds potentially come through that period. But I said one of the key points is that we also have very supportive shareholders, and the founders and main investors in here, so some of the board of management have put money into this company. And we've invested in the order of $30 million through what has been a very tough market for the sector, but that's allowed us to come out of the back of that far stronger and hopefully into a much stronger market. I think it's important to give you a sense of how we are coping with the COVID-19 pandemic. Ultimately, the safety and well-being of our team is of paramount importance. Finland, as a country, has so far been able to manage the situation very well, and that has meant that we have suffered very minimal impacts. The actual Sodankylä region where we work, have been no recorded cases so far. And in Lapland as a whole, to give a sense of the population density, which also helps, there's only 116,000 people in the whole of Lapland, which is probably about the size of the UK. So obviously that has been a big advantage to them. But we've put in place, I guess the right way to run this business environment. We do our social distancing within modern technology. You don't actually have to go to drill rigs all the time these days. You can reduce that contact. In terms of our office set up. It's an established office with its kitchen, cleaners in place. We've been able to keep that environment for our team to work very safely. And obviously, as we're not a remote site and all our team work or live just 35 kilometers away in the Sedankla town, obviously we don't have overseas staff that we've had to repatriate, so that's allowed us to continue our operations. All that said, we're very cognizant of what might happen and how this situation might unfold, and we have the ability to preserve cash. We can be quite flexible in how we run things. We still have one drill rig running at this point in time and what we call a bot rig, so we've been able to very much manage the situation well to continue our business as best we can. So in summary, I just want to come back to, we have this part of our mine, again, permitted mine, where we've been making some great discoveries. Regional exploration, we've 300 square kilometer land package. That package is very large. We have over 20 targets these days running, but of those, our primary targets where we've been making the discoveries recently are in this area 1, where we've already made 5 within 15 months, which is quite exceptional. We continue to drill those, and over the coming year ahead, you'll see us start demonstrating the scale of those. So we have a sort of 2-phase approach. So all these discoveries that we've made, they'll start shifting up into demonstrating the scale of each of those discoveries. And at the same time, our generative team, our generative exploration work will continue working through some of these other 15 odd targets that we have still to explore across the license. So a lot of news flow to come, hope a lot of drill results to come over the coming months ahead. And yeah, I'd be grateful if you keep an eye on the company. I think it's a very exciting time to be looking at Rupert Resources. With that, I'll hand it back to you, David.
Thanks, James. Very well presented. It's great for us to have you on this side of the business. Your perspective is really appreciated. Let's start with today with questions. We're going to turn to Steve Rentschler. Steve, did you have questions today for James?
Yes, I did. The very nice presentation, by the way. The 6,000, I think you said 6,000 meters of assays that are still out there. Are those from the 5 target areas where you made the discoveries, or are they additional targets?
They a lot of them are for a new target we're testing at the moment, the Haina South target, but there's also some still to come from those other discoveries as well.
And I think on the one page you'd said that I guess the proof of concept, which led to those discoveries in Area 1, is that proof of concept, is it the same one that applies over the entire structural trend, or have you had to chop it up because of the geology or whatever and rework your models, etc.?
I have another slide. Hopefully you guys can see that. So that's a bit of a geology slide. So it
looks clear.
Yeah. So yeah, I guess we divided up the whole license in a series of different areas. I think I can just draw over this. So there's basically, hopefully you guys can see my curve. I'll put a laser pointer up. You can see there's basically a line that divides the license. So the minor zone over here, which is all a different type of geology, and then there's a different type of geology over here, which goes up towards the Kittler mine. So this whole structural corridor we talk about is through here. So certainly our exploration technique around the mine is different from what we are here. And Area 1 is sort of the first primary area of exploring all the way along this structural corridor here.
So are the indications that you have from what you found in Area 1 would be that if you were to put that ore through the old mill, would require an entire reconfiguration, different metallurgy, flow sheets or whatever, and only the new stuff that you're finding around the previous pits would be applicable to go through as is?
Currently, we've already done, I guess stepping back from that, and one of the approaches to exploration, when we do our exploration, we drill maybe 1,500 meters on a target. Then if we get good results, we do some initial network to see how it would process. So far, none of the discoveries we've made show any elements of being refractory. The difference between the part of our ore is that is all gravity gold separation. So part of our is a unique deposit because it just gets all of the gold out by gravity effectively, and a little bit of flotation so 85% recoveries, and that's why it has very good economics for that. The discoveries in Area 1 are mostly related, so they do have pyrite with them, or chalcopyrite, some of them copper, so it would need a flotation plant to be added to that circuit.
Do you have any idea on what the CapEx requirement would be to add that circuit?
I'm not going to make a guesstimate. It's probably not worth making, but yeah, I still think it would be modest. It's certainly more modest than building a new plant. For the main thing about plants ultimately is the infrastructure. The key thing we have at Part of Our is we have a very large tailings facility, 8 million cubic meters of storage capacity. Plus we also have all the power and water feeds into there. So obviously the actual flotation circuit you require for there, and then that would, yeah, we'd expect to be able to keep that to a modest level, just depending on the size of the discoveries there.
And typically, what's the drill depth that you're going to?
Point. At the moment, we're only drilling quite shallow. We're drilling to about 200 meters or 150 meters for the most part in the exploration we're doing. We're yet to do that step back deep drilling, obviously. So Kittilago's mineralization there is down to 2,000 meters. The Sakati project I referred to, that doesn't even get going until 350 meters, and even Part of Our is down to 450 meters. So there's a lot more potential to be tested with the depth.
Okay, thanks very much for answering the questions.
No worries.
Thanks for your questions, Steve. Always appreciate you on our calls. We're going to turn to, let's turn to Chris Mulcahy. Chris, questions today for James?
Thank you, James. Can you hear me? Great
Yeah,
presentation.
fine.
I'm thinking of you as a detective, taking very cautious steps in your presentation, each one backed up by evidence. However, you have a big background in these matters. Can you fantasize for us a little bit more? I mean, there's so many moving parts here. The earlier question reflected my question. I mean, I'm just asking it, I guess, the same way. Where'd you place your bets here, if you were a betting man, on how this thing? I mean, are we going to be underground? Are we going to be? Are we going to be with heap leach? Are we going to be in the western or in the eastern section? Are we going to be? And am I correct that there's no refractory? So it's all. I mean, you're drilling near surface 150, and yet you're telling us that there's assets much deeper. So many different things here. Can you take a shot at your best fantasy as you slip off to sleep in the evening?
Okay, I guess. Thanks very much for the question. I think if you step back, and I think I'm going to put up the license, a bigger picture here of the opportunity. I guess we see this playing out, and this is really what I think you're asking me. How does this play out going forward, and where's, what are the best scenarios going forward? There's obviously, at the Part of Our mine, we haven't explored much there in the last couple of years. We spent a lot of time trying to really understand that deposit better. I'd say the outcome of that is that, we've obviously shown the deposit is much bigger than the original operator. The original operators, their view of it was like 150,000 ounces when they first discovered it. It's now probably 1 million ounces, and we still haven't seen the extent of it. So it's about, it's all about trying to step back and understand what that true potential is, and that's what you're asking me. So I see there's a lot of potential at the mine and near mine still, and obviously that material, could just be put through the mine itself. The Part of Our mill, we still see it all being very similar there. There's some slight differences, but ultimately, that very low cost, high return gravity project works very well there. If I step back to Area 1 in just the work we've done there, there's the potential. All the mineralization there is relatively similar. It's gold associated with either a copper mineral, chalcopyrite, or just pyrite. The best case scenario is that we ended up with multiple deposits here that all actually, it may well end up generating a brand new mining area here with its own milling facility for flotation. It's only 5 kilometers from the main road just to the south of us here. So that may well end up, if it becomes big enough, justify its own infrastructure in time ahead. So that's a sort of dream scenario where you discover something there that it has its own has its own life, has its own potential to be a new project on its own.
Under that scenario, Jim, why can't we start at the Padavera mine and mill, moving some dirt and making some money right now?
Yeah, and that has, we understand the deposit better. The reason we haven't done it so far, and to that point, is that the previous operators never understood the deposit. So if you look at I guess two elements. Look at the valuations of single mine small producers in the market. They always tend to struggle. Why do they struggle? Because they don't have a long enough business plan in front of them. The deposits are relatively small, and the market can never really understand what that real potential is. And what we're trying to show here is that potential, that there's much more than part of Aram. We have spent the last year showing that potential. I think the market's just beginning to realize it. At the part of Aram mine now, we now understand that deposit far better, and we'll move that forward towards understanding the true economics of bringing it into production as the scale it was before, but also its potential to be bigger than it was historically too. And so, yeah, we are at that stage now in terms of moving to that economic evaluation of the mine. And done properly, that could be a great opportunity, as you say, to restart that mine. When? Subject to doing a PEA and doing that, we, I guess within the next two years.
Thank you.
Thanks for your questions, Chris. We'll turn to Art Yevon. Art, today, question? We're just unmuting Art.
He might be offline at the moment. We'll see if he
Come back.
reconnects.
We'll come back to him. We'll turn to Chuck Deeds. Chuck, good to have you on the call today. Do you have a question? We'll come back to Chuck as well. Let's turn to David Smith. David, good to have you on the call. Are you with us today?
Yes, James, I was looking at your fascinating project that you have there. How does the opening of the mill play into the event flow? You want to find that, you said you need a PEA, find a certain amount of more resource, and then do that. And when that happens, what kind of cost factor will be involved in restarting it and rehabilitating it? And then the third question is, you'll probably need to raise more money over time. Does Agnico have the right to remain at their percentage level as you raise more money?
They certainly have a right to continue to participate in, to hold their position and continue to participate in any future fundings for sure. And they have a right of first refusal on, if we wanted to joint venture something in the future. We don't have a joint venture with them at the moment. They are an investor, and we have a very strong relationship with them in terms of understanding what's going forward. To your first point in terms of CapEx, 2 years ago, we already did some early evaluations of what would be the potential CapEx to restart. It was never in a public document, but it's certainly, it's low double-digit figure, as in, starting with a 1 was where we came up with. But we see that as the actual capital to restart it. You could restart it as it is today, is a direct answer to that, but you would then be investing an awful lot of your cash flow in terms of fixing things that might break initially. So you'd want to do some investment initially to make sure that you didn't use up all your free cash flow in continuously fixing things, and that you could, because the key about it is that you'd want to generate, and obviously at the current gold price, want to generate significant free cash flow that you can continue exploring. And to give you a sense, we're spending in the order of $10 million a year in exploration, so you want it to be able to generate that kind of money.
Thank you, James.
Thanks for participating, David. James, just so you know, you seem to have a little bit of a bandwidth issue, so you've gotten your voice is it's still very clear, so we're going to continue on, but understand
Okay.
you seem like it's just a little bit of not coming quite crystal clear. Just wanted you to know that. We're okay at this point. I'll let you know if it gets worse. Turning to Doug Loud. Doug.
Good morning. This is very interesting, especially because it's in an area that I think a lot of people don't even know they should be paying attention to. That being said, my favorite question is always, how are you doing with all the permits for all this drilling you want to do for the new areas?
Okay, so Joe raised the issue of Natura 2000, which I haven't addressed myself. So we have no Natura areas. So I'm just going to flick back to this picture. All the land here, for the most part, is owned by the State Forestry Company. So it's an actively farmed forestry area. There's not really any virgin ground. If I look at Area 1, there's a wind farm just up on the hill here. And to the south of it, there's infrastructure here, and there's even a 4G mobile tower where my cursor is now. There are no restrictions on any of the land we hold. We don't have to permit individual drill sites. We don't even have to put forward a plan. We have a relationship with the local reindeer herders, which is a commercial business anyway. The only restrictions are that we wouldn't explore within near to people's properties, etc., and things like that.
Wow, that's great.
So
Okay.
it allows it. That helps it being a great area, and obviously our neighbours Orion are just to the south of us, so they're obviously actively exploring just to the south of us there as well.
And I can't tell from this picture, but is water ever an issue?
When the snow melts, it will be an issue for a couple of months or a month and a half, probably, while that snow melts. So the advantage for us though is that we can move our equipment back towards the mine, and we'll be exploring nearer the mine while the snow melts in those areas, and then we can move back to those other areas once that period's gone. So that whole breakup period, you call it in North America.
And then you have plenty of water for your mill?
Yes, absolutely. Well, water isn't an issue certainly up here, but also we have the original mine took water from the river. In future, we take water from the underground workings. So you see that is even less of an issue.
Great, thank you.
Yeah.
Thanks, Doug. I'm pleased to turn to Jerry Needleman. Jerry, one of our original gold bugs. How are you, Jerry?
Good, good. Yeah, James, a super company. I first got interested in this when I saw Agnico-Eagle make this nice investment in the company, and looks very good. I'm going to change your name when this thing all works out to James with all the money. I'm sure you've heard that a million times, but that's what I expect from this situation. In terms of any political risk, I mean, you're far from the Russian border, and I know Putin loves gold. I don't think there's any issue here. I've never seen anything in Finland that so far that's really a political risk. So just thought I'd run that by.
No, I mean, again, when I was looking at other places to go and work, obviously, I spent a lot of time traveling as a fund manager all over the world, going to places where there was plenty of political risk, from Venezuela to northern Russia to a lot of the Stans areas of the world as well. So I guess, I was looking for a place where you had the lowest potential political risk. There's always political risk though, be it, have it internally. In terms of the government of Finland, there's potentially, there's quite a left-leaning Green government, but at the same time, there's an awful lot of support for mining in this country still. And as Joe said, there is some great a great history of mining in the country, and I think we're continuing to see that support even now in people's view of potential development in new areas. But but your main risks here are Natura for sure is an issue, but you can still work through that, and just ensuring that you keep your license to operate. I think the Russian issue, I would say, is I don't see that as great as a risk. The risks we face are more, have you got a really good relationship with your locals? We have a very good Finnish country manager who's the guy that goes and drinks coffee and eats donuts with all the locals that live around here. And it's about keeping that relationship. That's your biggest risk in this environment, I think.
Thank you, James. Great talking to you.
Thank you, Jerry. We'll turn to Murray Vanderbilt. Murray, question today for James?
Yeah, James, interesting, but I'm just, you're talking about 2 years or so to get the mill back online, and low double digits in the millions to do that. And it just, with where the gold price is today, and the fact that in one slide you say you think you've got 500,000 ounces inferred. I thought I heard you say you think maybe there's a 1,000,000 ounces there. I just think if I were in your position, I'd be trying to get something going at the mill in less than 2 years to generate some revenue while gold is at these prices and hopefully moving higher. Because I presume to get a feasibility study on the area 1 in general, or Satina, that whole complex, you're talking 4 more years before you could get into production. So I know you want to do drilling to show you've got more resource, but I'm also, you got the mill, you've got some material in the tailings there already. I just think I'd feel more comfortable if I saw you gearing up and creating some cash flow while the getting is good, so to speak.
Yeah. Okay. Well, thanks, Max. Much appreciate the question. I appreciate that, and obviously the gold market has changed dramatically since, as I said, since I took this job on. Certainly when I arrived here with the euro gold price at 950 or maybe 1,000 euros an ounce, that prospect wasn't that attractive, because if you decided to do that and committed to it, you would have maybe made free cash flow of $1 or $2 million, which isn't going to pay for you to, as I think an important point was Joe raised, is that the landholding costs here alone are quite high. So it's about, I guess, how ambitious you are for the company. Ultimately, we see, I joined the company because they had the mill, they had the opportunity to get back into production, but I didn't see the economic environment at that point in time being able to then drive the ability to unlock the value of what is contained among this much larger license package. It's about a much bigger opportunity, is how we see it, is that part of Ara doesn't even itself sit in the best part geologically, as far as we're concerned, of the license package. There is potential for much bigger deposits above and beyond that. Obviously, with the gold price environment that you're in today, and obviously I say a lot of experience that the one thing you do not know what's going to happen is whether the gold price is going to stay here or go higher. That's the one bit least bit I can control of that. Is obviously the production scenario, which could happen in a very short order, as I said, doesn't have to be 2 years. We could accelerate that. Certainly could demonstrate huge amount of, would demonstrate cash flow, and we'd be taking that gold out of the ground. But I just want to put a concept out there. Obviously, as soon as you start taking the gold out of the ground, the market will value this equity as a gold producer. And if I was to say it was a gold producer, the valuation of this company as a single mine gold producer, with all the headaches that happens day to day and looking at many, many over the years, that is not necessarily the best way to demonstrate or extract the most value from the assets that you have. Because all it takes is one bad quarter, one issue in the mill to undo, doesn't matter what the gold price is, to undo all that potential that you had. And also, if you take on debt, then effectively you've signed over the assets of the company to someone other than the shareholders. I'm a shareholder of the company, and right now I don't want the company to take on debt and sign over the assets of sign over all of these assets as security to some debt. That I won't want to do that. Whereas I don't know what I'm signing over right now. It's a bit like me saying I'll sell a royalty on it today. I don't know what I'm selling today. And I went to the shareholders a year ago and said, what we need to do, we shouldn't go into production now. We need to spend at least a year, which we're just coming up to that year, demonstrating that there could be the potential for much more gold on this deposit, much more gold in the ground than there is at part of Ara, and much more potentially economic gold. So that is ultimately, yes, the market won't pay you. As a production company, stepping back, production companies get valued about 10% of the gold that they produce. You can easily do, or the gold that they have in the ground, because that's the average margin on a gold company on the production. So, if we did that as part of Ara, yes, you might get, you could still see yourself on that amount of valuation. But the opportunity for here is to explore and demonstrate that there is multi-million ounce potential on it. And as I said, going back to my slide of the actual valuations for exploration companies and those with a mill, you can unlock just as much value without even turning the mill on if the deposits are truly economic. Because you've got this industry, and we said it hasn't been finding deposits particularly quick over the last few years. They spent a lot of money doing exploration, but they haven't been finding really big deposits. So all the senior producers are looking for good projects to develop. This is a good project, great jurisdiction, and ultimately, whilst one option certainly, and I agree, is to develop the mine and bring it on production, the option we've been working with and we continue to work with at the moment is to demonstrate that there's a much bigger opportunity than a 35,000 ounce per annum mine in this company.
So if I can put some words in your mouth, although the mill and the price changes the economics of that road, so to speak, or course, I think what I really sense is that the drill results as you have to date, how do I put it? Your enthusiasm, support your enthusiasm for expanding the resource in the new area. What do you think is the better option at this point in time?
I think it's about
probably based on your knowledge of the geology plus what you've seen in the results to date from your drilling.
Yeah, and I think that's quite hard for obviously it's hard for us to relate that to investors yourselves. And I think you'll see that we'll start demonstrating. I think, you know, we've only really been exploring here really actively since September last year. So it's in the best part of 6 months, really 6 to 7 months. And in that time, we've had a huge amount of drilling success. You haven't really seen that come out in the results. And over the next couple of months, you'll start to see more and more information of that. And you'll start to see analysts beginning to pick up on that, hopefully. And obviously, it's already been recognized. Obviously, Agnico, to some extent, recognize that opportunity because they're only they're investing in companies where they see an opportunity, you know, for large deposits that could be the size and scale of that they're interested in. So I think you know, let us demonstrate more of that over the next few months, and hopefully I can convince you that that's a good way to demonstrate the value of the company.
Thank you very much. It helps a lot.
Thank you.
Thanks, Murray. Really appreciate your question. We're going to turn to Scott now. Scott, do you have some questions from the audience?
Yeah, I do. And in fact, I have a question from Chuck Deeds, we tried to get on earlier. He typed his in, and it may be somewhat similar to the question Murray just asked, but I want to give you a chance to answer it anyway. Is there desire to open or sell the asset? It seems that AEM is interested. Also, any price history on what it might sell for per ounce as a resource?
I guess, look, we've been having a slightly different opportunity to most companies because we have some beyond Agnico, we have some very strong shareholders who've been funding this company, you know, up until now. So we've always led off in the fact that we have the potential to develop the project even ourselves in terms of, you know, go back to, you know, that is one opportunity to develop it ourselves. You know, should no one else want to do. But also, you know, through the work we're doing, we hope to be able to demonstrate that the assets of this company are very attractive to, you know, one of the larger peer groups of this company. In terms of, you know, I guess I'd refer you back to this slide in terms of, you know, price discovery, what people pay for an ounce that's discovered with infrastructure. If they paid in the order of $60 to $70 an ounce discovered for Dalradian and Kaminak, they paid $130 an ounce for the discoveries by Integra. That was the Eldorado transaction a few years ago. But obviously, you know, looking at, you know, a multiple of that again for something like Richmond. Obviously, they were in production, which neither Integra or ours. But we do have, you know, we have the potential to be in production as well. So I think, you know, would we be happy if we could find ounces between $10 and $20 an ounce, or even $30 an ounce, and sell them in the future for $150 million, $50 an ounce? That would be a very good return for shareholders, I think.
Great, thank you. And I noticed that we have someone in the audience with their hand up. Catherine Wolf, would you be available to ask your question now? Catherine, are you there? I'll try to circle back with Catherine. Next comes a question from Art Yevon. Does Finland have any problems with its eastern neighbor that would adversely affect gold exploration operations?
Okay, I think that's referring back to the Russian question again.
Yes.
I guess we are 200 kilometers away from the Russian border. It's a very big country. There is exploration going on right up to the border, and I guess you know, I don't see, again, I just don't see that as an issue. Obviously, yeah, there is no at the moment. There's no political tensions, particularly between the two countries. So I don't see that as an active risk that I'm concerned about now.
Great. All right, next question. Will you be doing anything at your Red Lake property given the changes of Red Lake and in particular Great Bear Resources Dixie project?
Okay, well, thanks for raising that question. I think there's obviously other assets inside Rupert that we haven't talked about today. One of them is our Red Lake property. We own the Gold Center property, which is basically a long strike and adjacent to the Red Lake mine, which was bought by Evolution recently. Yeah, we continue to look at opportunities for that. We're not actively exploring there, but we see opportunities for, you know, for joint ventures or potential farm-ins of that asset. And certainly with the active, you know, what I guess excites me for the company is that we own a very large land package in one of the most exciting exploration regions globally in northern Finland. I think with ourselves and some of our peer group companies doing the exploration and the fact that you've seen Kinross come into the area, you've seen Newmont into the region following the Goldcorp position, and obviously B2 Gold. But obviously, in going back to Red Lake, you know, with the Great Bear discoveries, obviously the Madston work the guys are doing at Madston, that's you know, probably one of the other most exciting areas for exploration in the world. So we're glad we held the license, and we hope to be able to unlock some of that value as well. Again, that goes back to my portfolio manager mentality. I don't like lazy things sitting in the portfolio. So, you know, if we can, we try and optimize the value of them as much as we can.
Great, thank you. I have one more, unless someone else wants to type one in, and it is just to clarify, how many meters do you plan to drill in 2020, subject to COVID delays?
Yeah, we came earlier and said, I guess around the Agnico decision, we had about a drill budget of about 25,000 meters. You know, that's somewhere between 20 and 25,000 meters in 2020.
All right, that's the questions. I just got one. I'm sorry, I just got one that was typed in. History shows that the last time the Russians invaded Finland, it didn't go. Okay, I don't think that was actually a question. Sorry about that.
We don't have to belabor that.
We got that. Yep.
Please.
So I think that's it from the field. No, that's it from the field.
Wonderful. I want to ask. Just go back to Steve Rentschler one more time. Is Steve still on the line? No, he's moved on. Okay, I'm going to turn it back to you, James, for closing remarks.
Well, thank you very much, everyone, for attending. It's been a great opportunity to hopefully give you a good insight into what Rupert Resources is about as a company. You know, an exploration company, but not just your average exploration company. Exploration in one of the most exciting parts of the world, and with obviously our mill, and obviously we're very well funded. So thank you very much for your attendance. Thank you very much, David, for organizing this. And thank you. Cheers.
Thanks, James, for answering everyone's questions, and very well presented. And I want to wish everyone a pleasant afternoon. Thanks again for your attendance.